Greetings everybody, Sive Morten is here with the Forex Peace Army.com. Let's take a look at the performance of the gold market, discuss what we're gonna do today on the market, what the setups we have, and actually what has happened yesterday. So right now, since this is just short update video on the current situation, I will not pay attention to Jerome Powell's speech. I just would like to say that market needs time to understand what has happened, to analyze the statement that Jerome Powell made, and definitely it takes a few sessions to come to conclusion. Probably I think that we should see some market response effect of the speech somewhere in the next week. Currently, I wouldn't pay too much attention on the market reaction that we see, and do not make any foregoing conclusions based on the chart that we see currently. I would better focus on the short-term setup and what are actually technical reasons we have for trading, and explain why we think so. So first of all, starting on the daily chart, we haven't got bullish grabber guys here. So neither on a retail broker chart nor on futures chart. So here's trend just turns bearish, but this trend is not confirmed yet because the first candle under the MACD line is not closed yet. Take a look at recent performance. 2 days before we said that this candle is also bullish reversal, giving some acceleration. Yesterday we had bearish reversal candle. But take a look, no bearish reaction here. Market has not dropped below this area. Which means that the bearish effect, if even it has happened, maybe investors thought that's not enough dovish statement or something. It's not strong enough here. Besides, here we have actually very great upside momentum. But what is more important, in a few dollars right above the market stands uncompleted big target, which is 1618 extension of the butterfly. All it takes together keeps the open for possible upper continuation and completion of this target first before any other reaction will happen. So at least this scenario seems interesting, especially if you take a look at the intraday charts. You will see that we could try to use it with a relatively very small risk. Of course, if you would like to. If you're conservative enough, maybe it makes sense to do nothing and wait for some bigger patterns that may be formed on the 4-hour time frame chart at least. But for now, why I think that this scenario really has chances to happen and why market actually could keep going higher and complete this target. First of all, based on overall reaction. If you take a look at the first hourly chart, recall our free drive pattern that we discussed. Take a look what has happened. If it would be bearish scenario, we should get something like this, right? So market should drop here down, forming downside reversal swing, or at least start forming a hand and shoulders pattern. But this is very common type of the performance of the market that intends to make another leg down when it is making the vision like it is forming head and shoulders, but then suddenly stops before neckline has been reached and turn up. This very often, I would say in most cases, leads to free drive patterns. It might be just treated as an indicator of possible free drive pattern is forming. That's why I pay lots of attention to this. Second, let's take a look at the reaction. It takes clearly shape of the bullish engulfing pattern, really sharp reversal here. It's another reason, and in general, this performance on the slope of the head to the downside is not quite common. All this taken together, additionally with the ratios that we could calculate it and where it stands, makes me think that this third free drive pattern really has chances to happen. And our target of this pattern stands precisely at the point where we have the target of the monthly or of the daily, weekly butterfly. So now how we could play it? If we take a look at the hourly chart, it's a bit different chart. Take a look what has happened. So yesterday's stop, so we said take a look at 3660, possible long position taken. I wouldn't say that it hasn't worked. So right from this level, we've got really great upward bounce. I don't know how you could use it, or maybe have you actually had you were in time to actually trade with it. It's absolutely madness. So nominally, yes, it works, and actually you've got the pullback even for the $330 above the current level, but you could see why I'm not really a fan of the trading with such a kind of the performance. So now what we have, market dropped to the 36.48 fib level, forming the butterfly. And very often when the butterfly stands in place, especially you can see such sharp of the upward action, it very often turns to the hand and shoulders. If we will get the hand shoulders, that will be great chance for position taking with a very small risk and very good upside potential. In fact, you could take the position twofold here. You could take position based purely on this engulfing pattern right now, or with just a minor retracement here, and it's actually trying to possess yourself for this engulfing. Or you could wait when the hand shoulders will be formed, then trying to take position on the right arm of this pattern, somewhere around the same 36.50 area. You could even combine the both. Why the engulfing pattern seems important is just because we can't exclude that market just keep going higher without any hand shorts. It's also possible. So from that standpoint of view, maybe it makes sense to take some part of the position, minor position around this with this engulfing pattern. Besides, when it will reach the neckline, you could move stops to the break-even, see what will happen. If it starts retracement, you could re-enter later with these head and shoulders. If it keep going higher, well, you already have the position. So just apply simple logic here, so it's not very difficult. That's actually what we have on the gold. For the big picture, I wouldn't hurry up and wait what will happen, because on the long term, we still think that market still is a bit overextended. And for taking the big position, investing position on the gold, we prefer to wait for some moderate pullback that might happen soon when the market will reach some important targets on the monthly and weekly charts. But for intraday trading, on the daily chart trading, we could use the current momentum and try to take these small setups on intraday charts, because it provides very small potential risk. And the potential of this trade is, you understand, really great. At 37.48, it's almost $100 per contract. Is a great profit if it will be there. So think, decide, and I see you tomorrow.